So, the S&P 500 hit an all-time closing high Friday, reflecting the staggering gains of a group of big tech firms against the backdrop of an astonishingly stable economy. The broad-based index closed at 4,839.81, up more than 1% for the day, exceeding the prior closing record set in January of 2022. The stock market rose upward in the final quarter of 2023 as evidence accumulated that the economy has not gone into recession territory, despite the Federal Reserve's movement to raise interest rates. Meanwhile, analysts point to an AI-driven frenzy on Wall Street that rivals the dot-com boom of the late 90s, when investors sought to take advantage of the transformative gains brought by the early internet. A surging S&P 500 is a welcome sign for the millions of Americans who invest in the index via retirement accounts. In 2022, investors had about $5.7 trillion in assets passively tracked to the S&P 500 and another $5.7 trillion in funds that use it to compare with benchmarks, according to S&P Global. The feelings voters have about the stock market and economy could affect the 2024 election, as President Biden and presumed challenger Donald Trump will each have to advocate regarding their economic records. Trump predicted a market crash if he doesn't win. Biden has already endured attacks from the right over inflation and gas prices, while his office has presented that he has both under control and emphasized a strong job market. Economic vibes are finally improving, and there is a notable surge in consumer confidence. Tech companies, including a few names closely linked with artificial intelligence work, steered the S&P 500's gains. 7 of the biggest tech stocks known as the Magnificent Seven, Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla and Meta, increased 75% on average in 2023 and portrayed 30% of the index's total market value at the end of 2023. AI is the new .com, said Michael Farr of Farr, Miller and Washington. It's the new magic that is going to change the world that we don't really understand yet. But we all understand it's very powerful. The Magnificent Seven stocks made up around half of the S&P 500's progression last year. Nvidia, whose high-performance chips have become trendy for AI uses, had the best year of the bunch, at one point obtaining nearly $190 billion in value overnight, a 24% increase. Stock market surges into 2024, shrugging off recession fears. The surging values of big tech stocks followed a down year for the industry in 2022. In 2024, investors can expect that sector to be good, but not great, said Ross Mayfield, an investment strategy analyst at Baird & Company. There was concern about the rally earlier in the year that it was too narrow, not built on solid fundamentals but AI enthusiasm, Mayfield said. That has kind of been laid to rest in the last couple of months. You're really starting to see leadership emerge from more cyclical and economically linked stocks, and the market has broadened out. Other stock indexes have been surging also, with the Dow Jones Industrial Average and tech-heavy Nasdaq Composite Index attaining records of their own in early December. Although the rest of the market has lagged big tech, analysts say promising economic data from recent months has uplifted optimism about the broader economy. Everyone expected a recession. The Fed and White House found a way out. At the commencement of 2023, Goldman Sachs placed the likelihood of a recession at 35%, bucking a much higher consensus estimate of 65%. But a recession has yet to happen. By November, when the S&P 500's latest rally had begun, Goldman had lowered its probability estimate to 15% as it declared the economy was on its final descent to a soft landing. The hard landing became a fictional Netflix documentary, said Dan Ives, senior analyst at Wedbush Securities. The way forward for the stock market depends in large part on the Fed's continued approach to interest rates, with many investors now hoping for rate cuts as soon as March, said Wayne Wicker, a wealth manager with Mission Square Retirement. The only thing that is contributing a little bit to the uncertainty we've seen in the last couple weeks is, where is the Fed going with inflation? Wicker said. It's a key target as to whether the market has it right that the Fed will be beginning rate cuts in March, or wait until later in the year. The last rate hike was in July, and the central bank left interest rates unchanged in its final meeting of the year, with Fed Chair Jerome H. Powell signaling that officials generally think we're at or near the final level, and that another rate hike is not likely to happen. Now analysts see signs of a resilient economy. Inflation dropped to 3.1% in November, far lower than its June 2022 peak and closer to the Fed's 2% goal. The number of people seeking initial jobless claims came in at 202,000 as of December 14, reflecting a drop of 19,000 from the previous week, according to a preliminary estimate from the Labor Department. Consumer spending also held steady as it increased 0.2% in October. The S&P 500's path to Friday's close had a few hiccups. Leading stock indexes seemed to level off in the final weeks of the year, with the S&P 500 continuously stumbling as it approached a record. FAR, the DC-based investment advisor, cited the tendency of many funds and investment advisors to reallocate their portfolios at the start or end of a year. Also, he said, exceeding a new stock market record requires overcoming a certain level of anxiety. Someone has to pay a price that no one has paid before, FAR said. When you go through that point, emotions will repel you until you are persuaded that the downside you had feared does not materialize, and you forge ahead. And that's how the market dances. Thanks for watching. Please like, subscribe, and leave a comment.